cameras for you so you can get your photo taken.
No one wanted me. Okay. Hey. Let's see.
Hi, good afternoon, everyone. My name is Jeremy Harrison, Press Secretary to Governor Carney. Governor Carney will be happy to take your questions for approximately the next 20 minutes. If I could ask you to state your name and affiliation before asking a question, and we'll give you everyone one and a follow-up, make sure we get around an entire round, and we'll see how much time we have left. So if you can just indicate to me if you're ready to ask a question. Governor Carney, if you're ready. Libre à vous de poser vos questions dans la langue officielle de votre choix, bien sûr. And with that, we'll start with Theo at Bloomberg.
Okay. Hi, Theo.
There's been a string of negative eco data reports out of Canada over the last month. Wondering how that's affecting Bank Canada's outlook.
Since the release. Sorry, is that picking up? Okay. Since the release of the NPR, there's been some data which has broken to the downside. There have been some neutral and some more positive data as well. But I think I would say that in general, and we're not in the process of updating our forecast. As you know, our next one will come out in April with the NPR then. But in general, if you look at the risks to the outlook that we had outlined in the NPR, the positive and negative risks around the outlook to inflation and output in Canada. On the output side, in the very near term, more of the elements of the downside risks have materialized than the upside risks. Inflation is pretty much tracking in line with expectations at this stage. So I don't want to overemphasize shorter term data, but there is a bit of that bias, and I would say that both, particularly around the fourth quarter, it might be of 2012. We'll find out shortly, but it might be slightly softer than we had forecast.
Second question, UK related. We had Moody's downgraded UK debt last week. Wondering if you think that has any implications for the Bank of England, given that it holds so much British debt.
Well, I don't think it has any implications for Canada, and I'll leave the Bank of England to respond to any particular questions for it. Thanks.
At the back there, madam. Go ahead.
Christina Howard on NBC. Today, RBC reported home affordability has improved thanks to a booming market and low interest rates. Do you still think that the housing sector remains overheated and homes overvalued, or do you think that the housing market requires further intervention to let it cool down?
In terms of, we think that the interventions that have been taken by the Minister of Finance over the course of the last couple of years, by OSFI in terms of improving underwriting standards, and that the stance of monetary policy, the combination of those three have been appropriate, that they are contributing to a more sustainable evolution of the housing market and of household debt. I mentioned in response to a question in the room that we're seeing that we could be on the cusp of stabilization of the household debt burden of Canadians. In other words, it's going to stop rising, and that obviously is welcome and something that we have been focused on. I don't want to get drawn on specific valuation advice on houses in specific markets. Housing has been firmly valued across the country for some time, and some modest adjustments are as I say, are welcome. So we continue to watch this closely, but as a whole, we are encouraged by developments, and it increases the prospect of I'm repeating myself, but increases the prospect of a more sustainable evolution of housing, household debt in Canada, and that is positive for medium-term growth prospects in this country. Does what mean that it's changed? Sorry. Well, the bank, the view of the governing council of the bank in our most recent decision was that given that the direction of developments in the housing market, and given that there was some more slack in the economy, that the need for there's still ultimately a need for some withdrawal of monetary policy stimulus. Interest rates are 1%. We have a very well-functioning financial system, but that the prospect of that was less imminent, and obviously we stand by that assessment.
David?
Hi, David George Kosh, Dow Jones Wall Street Journal.
Hi.
Can you just clarify some of the structural measures that you mentioned in your speech today regarding such as ring fencing?
Yeah.
Were you speaking on behalf of the Vickers Commission proposal to ring fence commercial wholesale banks from riskier investment banking,
Yeah.
the UK sector, or
Right.
and the units of foreign banks, or were you likely discussing more impact on the U.S. Banking sector and demands of big foreign banks?
Yeah.
The U.S.
Yeah, no, the term is used, it's a fair question. The term is used in different ways. I wasn't speaking specifically about the Vickers issue. The passage you're discussing, or the core issue, or one of the issues, is the ring fencing of capital and liquidity in national jurisdictions for sometimes for very valid reasons. But part of that is because of the reduced confidence that it's partly the experience of the crisis, but it's partly because of reduced confidence that there could be orderly cross-border resolution of major institutions, or to use the American expression, a bit of I'm from Missouri type attitude. Show me that you actually can effectively resolve these institutions, and if so, then that would presumably lead to some loosening of some ring fencing proposals that have been mooted. So a specific and obvious example, and I'm not making a value judgment, but on a specific obvious example is the foreign bank holding company structure that has been mooted in the United States by Governor Tarullo, amongst others.
So are you actually in favor then of the Vickers Commission's proposals for the UK banking sector?
I believe in my testimony I made it clear that I was, yes.
Gentleman at the back.
And if I didn't, I am. Sorry. Maybe I should just do that now to make it easier.
Sean Benjamin at CBC.
Sorry.
Canadians seem to be heeding warnings to rein in debt, and the Bank of Canada is making clear that hopes it continues. How much headwind do you think this will create for Canadian?
I'm sorry, for Canadian banks. Well, let me say one thing first about the Canadian economy as a whole, because this is something that we've been pointing out, which is that the Canadian economy as a whole has received quite substantial boost from the housing sector and consumption that has in part been financed by borrowing against equity values in homes, and that the Canadian economy, in our view, in the latter half of last year and extending to the first half of this year, is undergoing a rotation, an adjustment. As the pace of this borrowing goes down, this activity goes down. We've seen it in some of the housing start numbers that I think Theo referred to, or broadly referred to, would be one example, but a rotation towards business investment and net exports. So that is sort of the fundamental challenge or dynamic in the Canadian economy right now, and we're going to see some choppiness in the data potentially until that rotation is effected. First point. Your specific question is related to banks, and again I referenced it in the room, but we're seeing a dynamic where the stock of household debt growth is asymptoting down to around 3%. From double-digit levels a couple of years ago, and we are seeing in the very short term a sharp uptick in corporate borrowing. Largely seems to be. I'm hedging here. Pre-funding of some refinancing, a bit of M&A, a bit of dividend recap type behavior, but. Potentially, and certainly if it's sustained, it would be more consistent with a pickup in business investment. To get to your question, obviously an individual financial institution, their challenge or their opportunity is to pick up some of that additional corporate borrowing business while the private side comes down. I think what has to be remembered in all of this is it serves nobody, a bank, certainly not the individual, and certainly not the country, to run double-digit or very high levels of household debt growth, just for short-term gain and long-term pain. So that's why all these steps have been taken in order to encourage the economy to undertake that rotation. Yeah.
To follow up, is the banking system in Canada is seen as strong and secure relative to the rest of the world. But what are its weak points? What is the Canadian banking system? Where can we improve as we're doing so well?
We can always improve. A weak point would be to answer that question directly. There is a value to having. Obviously, there's a value to having multiple business lines and some diversity in the franchises of a banking institution. Not too many, or else you become too complex, but effectively to not be a monoline institution in terms of the way you grow your business. And the better ones do have that diversity, and we'll see that in their home market as things evolve going forward. But look, in central banking, in finance, in banking in general, obviously it's when you don't think you have weak points that you really do, and you're going to get blindsided. So there has to be a constant evaluation of the risks that they face, both in terms of the economy, but also in terms of how they manage their business. And we and the regulator certainly look to see that level of humility and constant questioning in the institutions. And we have to constantly question our assumptions as well, which is what we try to do.
Gentleman there.
Norman DeMono, the London Free Press newspaper.
Yes.
Governor, I wonder if you could flesh out your suggestion earlier that we're in for a little choppiness in the economy ahead. Do you see that manifesting itself in the reduced GDP, increased employment, trade?
Well, I think, yeah, I was referring to what we're seeing right now in terms of the data. I mean, we've expected a weak fourth quarter of 2012. That's history now, and so we're just waiting to get the actual numbers from that. But we saw in that, and in fact, in the second half of the year last year, particularly weak export growth, even relative to a relatively weak outturn in global markets and in global economy and in the United States. So there's still this competitiveness element there. There were a few special factors which are coming off, but there's still an underlying competitiveness element to there. The second point was just that we're seeing this adjustment in the housing sector, which is intended and welcome. This is for more sustainable growth in household balance sheets, in personal wealth of Canadians, and of a more sustainable growth of the Canadian economy. But as that growth is coming off to a more still a modest pace of expansion and consumption, and we think a more constructive evolution of events in the housing market. As that comes off, it needs to be replaced, and the pickup needs to come from business investment. We see good intentions. There's good balance sheets. We're seeing some signs on the corporate borrowing side. Some of the global uncertainty has come down, so we should see some activity there. So we have expectations of solid business investment. We stick by those. But then maybe a little tougher is on the export side, where we haven't seen that pickup yet, and that can induce some choppiness. So anytime you have all those factors moving, I guess is the point, that there could be some lags or leads in any of them that can result in some bumps in the data.
And the secondary question, I just want to think back to your conversation with all students and say that your speech seemed to point to the idea of the banking sector policing itself, acting ethically on its own. Is the answer really a call to bankers to do that, or is the answer in increased legislation and regulation, specifically in the U.S.?
Well, I think the answer is both. You can't. The fundamental point is you cannot legislate virtue. You can't, enforce integrity, and supervision can't guarantee. Even the most intense supervision can't guarantee, absolute adherence to basic ethical ethical norms. I mean, there is, and any time when societies or systems try to respond to fundamental failings by multiplying regulation and oversight and processes, you create a series of ways around them, a series of you create a couple of things. One, a more box-tick type culture. So it's okay as long as it's consistent with the regulation, as whether it's fundamentally okay what I'm doing. And we've seen how that didn't work in a variety of other jurisdictions. The ones who had the biggest problems in many respects had box-tick regulation. But it also creates arbitrage opportunities and well, I'll leave it at that. The point, though, is that there were certain things that needed to be fixed. Core to that was getting the market working again. So these issues of transparency or clarity, which I used, better disclosure, ending too big to fail, that's all about getting the market working again properly. So there's market discipline. And we needed to fix basics on capital. And as well, though, on top of all that, the industry as a whole, and I think they're moving in this direction, but the industry as a whole needs to finish the job on fully reconnecting with their clients and following core values. So it's I wouldn't want to leave you with the impression that the message is either just banks police themselves or we can solve all this with 1,000 rules to regulate behavior from now till the end of time, because we can't.
Got about 3 minutes left. Is there anyone who hasn't asked a question yet would like to?
Talk them out. Okay, we'll do 3 quick ones.
Three ones. Three.
Be quick.
Yeah. So the Canadian dollar has been under pressure in recent weeks. What does the Bank of Canada's analysis suggest about how far it needs to weaken before we see significant increase in exports?
Decline. No, look, we've viewed the dollar has been persistently strong for some time, and we have seen challenges on the export side, consistent underperformance. We do not view that the root causes of that underperformance relate to. Obviously, the level of the currency affects export performance and the pace of imports, and there are some positives with a strong dollar, particularly on the import side, importing the machinery, equipment, and other things that are essential to rebuilding prosperity here, productivity and prosperity here. But we don't have a view that you depreciate yourself to prosperity, and we're not looking at any target here. It's the building up the productive base of the country is what's continues to be required, which is another reason why that pickup in investment is important.
Go ahead.
Sorry, I just want to go back to something that you talked about in your speech. You talked, and then Bruce has part out. When you talk about changing core values, and you say you want to, or that banks should look at reorganizing compensation packages, that executives and senior managers have to change their values. Without legislating virtue.
No, sorry.
How do you ensure, or how can you create a more virtuous banking environment?
Well, I don't think you can. It's not about you can't legislate it. That's the point. This is the element that is the responsibility of the institutions themselves. And further, you can't. And I think I said this explicitly. You can't design the perfect compensation package that is going to align incentives, even just perfectly the incentives of the individual within the institution with the shareholders of the bank or the bondholders of the bank, let alone the broader societal impacts of what the institution does. So it's a responsibility of the institutions themselves. Better institutions will grab onto will fulfill those responsibilities. Those institutions who don't will consistently fall short on a variety of conduct issues. That's the polite term. Ethical lapses, that's another polite term. Criminal activity, that's the reality of what we've seen. And they will face the consequences of them. of those actions, and that's not a sustainable business model. Since we're sitting in a business school, and I'll make that point. But that's not what I was not saying was that there is a legislative, a regulatory fiat that could possibly deliver these type of results. It has to come from the institutions themselves and the individuals. And the best institutions know that, live that, and you see the product of that. And yes, all institutions make mistakes. Big institutions make mistakes, so there will be mistakes from time to time, but the better ones have this right, and those who want to be better are working on it.
Last one to do it. Sorry, we've got to go. Go ahead.
The Bank of Canada has, I think, for the past year, consistently overshot a lot of its growth targets, and now with growth coming in seemingly under 1% and inflation at the bottom end of the inflation targeting for the bank. What has the bank actually missed over the past year that has led to some of that overshooting of growth in Canada? And furthermore, I mean, how do you amend that going forward, given that Canada growth is projected to come in quite low?
We have the bank's forecast. If you look at it on a like-for-like basis relative to consensus, so if you look at it at the same time, not on the updated. We put a forecast out, as you know. We do it 4 times a year. We don't do a rolling. We do internally, but we don't do for public consumption a rolling, updated, full forecast. If you're a market commentator, actually one of the things you should do and do is do exactly that. So, but if you look at when our forecast came out versus where consensus was, we're slightly above. We're about 0.3 above, I would say, on average over last year on growth. But in particular, and that there's a bit of volatility in that. But I'll do the high end. First point. If I had to pick one element which explained that, I would say the external side. It's the export. It's the export side. Now, some of that in the latter half of last year reflected outages on oil platforms and some of the supply issues out of Western Canada as well. But some of that's also just, and we have what we call negative judgment on our exports. In other words, the traditional relationships between exports and foreign activity, demand, in effect, for Canadian goods, we've dampened our forecast of exports because we're seeing a competitiveness challenge, a productivity issue. We've dampened that relationship. But even with that, the export performance has been lower on average than we had expected. Now, that's not the whole story. There's a few other elements there, but if I wanted to restrict it down to one thing, I would do there. Okay?
Okay, we're going to have to leave it there. Thanks very much, everyone. Have a
Thank
great
you.
afternoon. Thank you.
Good. I'm shocked to see you here. Did you fly up this morning? Oh, you did?